Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so today we're going to talk about the effects of disinflation, deflation, and inflation, basically, on real estate.
Okay, so we're going to start out with some definitions. But before we do that, if you're a real estate geek and you're interested in finding out all about real estate and maybe some economic influences on real estate, please subscribe, hit the notification bell, like the video, and share the video. And here we go. So let's start out with a couple definitions because I think it's really important.
Okay, let's talk about what these things are.
Yeah. So inflation, we all know what that means. That that gallon of milk that you bought yesterday for $2 now costs $3. Okay, prices are going up. We got that handled, right? Disinflation. So pay attention. This is like when you diss somebody. Okay, disinflation. All right. Well, I'm trying to make it sticky. Okay.
Okay.
All right. So disinflation is when before you had maybe 8% inflation and now you have 4% inflation. So inflation is going down. That's all it means.
You still have inflation.
So you still have inflation, but inflation is going down. So that's disinflation. For the most part, we like disinflation because prices are getting under control and it makes life more stable, easier to plan. Good thing. Now, this is the ugly one. And this is?
Deflation.
Deflation.
Right.
Okay.
Not like the balloon that we shot down.
No.
We just shot down a balloon.
But it kind of does that sort of thing. It kills the economy. So deflation is where you have goods and services that cost you $150 to produce, and now you can only sell them for $140. That's deflation.
Well,
that's bad.
It's the price.
Right.
It was $150 one year, and then the next year it's $140.
Right.
The cost to produce is not really, that's profit and loss.
Okay.
But yeah, it's the total value. So in theory, your house is worth $2,000 less every year. In a perfect world, it just gets deflated in value.
Right.
This actually happened in Japan, I think, in the 80s, right?
Right. And Shinzo Abe, the prime minister at the time, what he did to combat that is he took interest rates to zero and he printed money, trying to cause inflation. Okay,
so let's do this. We're going to talk about this in the framework of what's happening now. Mm-hmm. So what happened was we had inflation. As you know, home prices went up substantially. Mm-hmm. The Fed raised interest rates, not mortgage rates, interest rates to try to combat inflation. The market saw this being a long-term thing, so the 10-year reacted and the mortgage rates went up too.
Right.
And that choked off demand for homes pretty much all over the country. Parts of the South have not been affected, but most of the country have had real estate values have fallen 5 to 8% from peak to trough. They're still up year over year.
Right. So when we're talking about real estate values going down, we're talking from the height of May, June, July, depending where the height was in your market to where they are today. Okay.
So the inflation is one of the factors that drove up home prices. Home prices were more of a leading indicator of the inflation, meaning the Fed waited too long. You should have seen the core inflation going up. And now potentially, though, we have the disinflation or deflation. What it appears to be? It appears that potentially the housing market is sort of showing there's this potential deflation, which could be bad if the Fed has overshot. Now, we don't think that's going to happen. We think this is short term because of it was a pop in interest rates.
Right. So the Fed, had the press conference thing, and what Jerome Powell, the word that he used was disinflation.
15 times.
Right. So disinflation, remember, was the good one, right? Where we went from a high inflation period to a lower inflation period, but we still have some inflation, which is good for the economy.
Right. The target rate is 2%. If it gets below 2, that's fine, but there tends to be pressure that it could go to a deflationary economy. And then keep this in mind too, that this is all measured by the CPI, and there are parts of the CPI. It's a index. It's a bunch of things.
Consumer price index.
There are parts of the economy can be in deflation, and then there's parts of the economy can still be inflation.
Right.
So like the price of eggs right now are up a ton, even though everything else is not inflating at that rate. Okay,
well, that's because Ethel DeHaan unionized, and that caused all kinds of problems.
Ethel, and the chicken union went on strike,
yes.
And it caused this. Okay, so we're going to talk about We're going to talk about a couple things. Basically, we're talking about pros and cons of how this is good, potentially, or maybe bad for real estate. So we'll start with one of the pros. If we have deflation, okay? If home prices are getting less, how does this affect affordability?
So initially, that's a good thing, right?
Why is it good initially?
Well, because more people can afford more homes, right?
Okay.
So that's kind of that's one portion of it. Interest rates are going to probably go down. Again, that helps with affordability.
Interest rates will go down because the Fed will put rates zero.
Right.
They'll be zero.
Right. But the other thing that happens is businesses have to cut back because now they can't sell their goods for as much money. So if businesses are cutting back, that means higher unemployment. So higher unemployment then kind of goes back that whole affordability thing. Now less people can buy houses.
Okay. So there's a cycle here. There's an economic cycle. Supply and demand does drive this. And these are, remember, real estate can lead or lag based on what's happening, which is important to know. So if home prices are less and then inflation is such, we have deflation and the Fed chops rate and then the market believes that rates will be super cheap long term, mortgage rates will tank. They'll be super low. You'll be able to, a couple percent, 2% interest rates maybe again. That definitely affects home buying. Like it affects home buyers because now people can borrow more money.
Right. And it affects home sellers because it makes it easier for them to sell their home because people can afford their homes. It also makes it easier for sellers because now they can sell their home and then go on to purchase another home for a similarly low interest rate. So that's another important factor. So it does actually cause more transactions, which is good for realtors. Yay!
Okay, now let's talk about some of the cons because in theory, what would happen with deflation is the economy would tank, we'd go into recession. So we would probably have reduced demand for buying.
So it goes back to what I said before that, if we have a recession, that means higher unemployment, less people in the market to buy homes. So that can be not so great.
Okay. This is the biggest one that I think affected 2022. If people believe home prices will fall, they will delay their decision to buy.
Right.
Now, we saw this in 2022 where, remember in 2022, we were up year over year. The problem is everybody got pushed into the beginning of the year because interest rates were still 3%. They were trying to capture 3% rates. And then people were told, oh, but home prices are going to tank. So you had a bunch of people then trying to sell, like in the late spring, early summer. So you had this artificial thing where home prices went up and went back down, but they're still up year over year. So it looks like home prices tanked, but it was just, we took all the demand for one part of the whole year and we pushed it all in the front of the year.
Right.
Like if you look at most people and ask them, you have home sellers that intentionally sold at one time of year. You have home buyers that intentionally bought in one side of the year. And then you have a bunch of people sitting on the sidelines that were going, oh, I'm not going to buy because I'm going to wait for home prices to fall 50%. But Wanda, what do we know that's happened in the last month over month?
Prices are up.
Home prices have started to go up again. So contracts are up. The whole thing is up. So now what we're starting to see is people are coming back into the market again. So that's possibly, that would be a problem with deflation is potentially people would say, oh, I'll just wait till home prices have fallen substantially. It doesn't look like that's happening now. It looks like we maybe have hit like the soft landing. One of the other problems, want to talk about how does deflation affect home builders?
Ooh, home builders, they're such sensitive people, honestly.
Yeah.
I feel so bad for them.
And they're not like sensitive personally, they're sensitive to economics.
Yes, they're very sensitive to economics. So, in a deflationary period, they get hurt, because obviously it costs them a certain amount to acquire the land and get the land ready to build and labor and materials and all that. And then in a deflationary period, they just can't sell the home for as much. So it really cuts into their profit margins. Now, the thing to keep in mind you don't have to feel that sympathetic for builders. I know a lot of us don't.
They'll be fine.
But here's the problem. When builders get in that position where it's not profitable for them to build, that kind of reverberates back into the whole housing market. Remember, we've talked about this many times on the videos that we are short housing units, right? We need more building in order to keep up with demand. So what happens when builders say, you know what, I'm going to just go on vacation for the next couple of years until the economy gets its act together? Well, now we have less homes coming on the market. Less homes coming on the market. That means that there is a shortage of homes, but even bigger than what we have, supply and demand. So that even though we might be in a deflationary period, it may still cause home prices to go up based on limited inventory.
Okay, so there's this economic principle called ceteris paribus. Basically what it means is all other things being held equal.
And if you want to send him a T-shirt for that, go for it, because he uses that a lot.
I love that word. I learned it. I have a master's degree in economics and business, and
that's the other T-shirt. He has a master's degree.
So, but we use this term all the time because sometimes you can't just look at one factor. And I'll give an example of it. So the jobs report came out, and it was over 500,000 new jobs created, and immediately people came on and said, "Oh, but the economy's so bad because we're in a recession that there's not really more jobs. It's people had to go get second and third job to make ends meet." And it's first of all like, okay, if we're in a recession, we're losing jobs. Where are these people getting these second and third jobs? Like, if there's not growing jobs, where are they getting these jobs? It's not like you could just say, I want a new job. I'm going to go out and get another job. If there's no job, you can't go get it, right?
Right.
Well, the flip side of that is then when we lose jobs, that means the economy is getting better because people are shedding extra jobs because they don't need them anymore. So you can't argue one and the other, right? You can't, like, it's a cyclical argument. You can't argue one. If it's getting better, there's a bad reason. If it's getting worse, it's also bad, right? You can't argue that. You have to be consistent.
So clear evidence that he reads your comments, because that was one of the comments.
That was one of the comments. So this idea of ceteris paribus is that all other things being held equal. Well, all other things are not held equal, especially with real estate right now, because we do have high interest rates, but the reason home prices haven't completely been obliterated is because home prices are sticky, rents are still increasing, and inventory is literally in the gutter. Over the last 3 years, which is the lowest of the last 40 years of inventory, we're not all the way at the bottom, but we're in the bottom half of the last 3 years for total inventory nationally. Even in Vegas, which is one of the probably 5 or 10 worst markets in the country, even though we're down 8, we're still up year over year, but inventory's tanking again in a pretty dramatic fashion, and buyers have sort of flooded back into the market here.
Right. So kind of to that point, those of you that have called us to list your homes for sale and you're contributing to the inventory, we appreciate it. Please keep those calls coming. Okay.
Okay. So the reason why this is important, the reason why I made this video basically is because we have spent a lot of time reading and talking about potentially what could happen over the next, say, 6 months, 12 months with the economy and everything. And, we could slide into this thing where we just get right back to 2% rates, and then the 10 years sitting at about 4.5%.
I don't know about that. I don't think that. I mean, I think that that's possible, but not in the short term.
No, but that's where the 10% is today.
Yes.
The 10%, and that's the forward-looking thing of where the market thinks potentially mortgage rates will end up, and that's what the low end of the estimates were, that mortgage rates would end up at 4.5. But even with that, it doesn't really matter, and this is why. Mortgage rates just briefly went below 6%. Like they touched 5.99 or something like that. But we have demand coming back. We have people coming back in the market. And one of the problems we have is that there's a lot going on right now. People are trying to make decisions. And I think psychologically, Juana, my opinion is, this is all opinion, that people are sort of over it. They think the worst is behind us.
Yes.
The inflation's under control. If we're going to have a recession, it's not that bad. The economy's still cranking out jobs. No one's going to lose a job. There is no force to sell. We don't have foreclosures. There's not much inventory. I think people are afraid what's going to happen if they don't have an opportunity to buy a house in 2 or 3 years. And they're just said, screw it. I don't want to be a renter and have my rent increase by, 5 to 10% every year.
So there are a few things at play here. So I said the same thing I've been saying for months, that by February people are going to be over it and they're going to want to get on with their lives, and that's what's happening. The other thing that's happening is, remember, a lot of people ended up bunking together, adults children went back and started living with family members over the pandemic. They've gotten thrown out. They've been tenants for a little while. Now they're ready to buy. So there's a lot of buyer pent-up demand that's here, and these people are ready to buy. We've talked about this a lot, that we've got a whole generation that is in their that have money. They're in their prime first-time buyer season. So there's a lot of that going on. So I think that the issue isn't the lack of buyers. I think the issue is the lack of sellers, the lack of inventory. I think everybody has already looked at everything that's on the shelf, and they've kind of turned their noses up at it, and they're waiting for new inventory. Kind of to that point, if you've turned your nose up previously at something, revisit it, because that seller might be willing to make some concessions and might make that place a little more attractive. Maybe you can do some renovations and turn it into the home that you want.
Yeah.
So let's talk about the next part, the disinflation. So now the disinflation, we were talking about that earlier, where we were talking about how inflation is going down, and that's what's happening now, and it just makes the economy stronger. You've seen that with the stock market, going bonkers.
Last month, really. Yeah,
I mean, if you look, some of your favorite stocks to love or hate have just gone completely through the roof. If your 401k was in the tank at the end of the year, all of a sudden you're back in the money and you're doing the happy dance. So that's an effect of disinflation. But disinflation, while that's making you happy, it can also hurt, again, the same people we're talking about. We're talking about the home builders. Because I said they're really sensitive ducks, aren't they?
Yeah.
So the home builders need like that Goldilocks spot, right? They don't like
2%.
Right. They don't like deflation. They don't like inflation. They don't like disinflation. They like that smooth road, right? And so we'll see what they do. It'll be really interesting. I mean, we know that they pulled back all of last year because there's been a reduction in permits. There's been a reduction in everything. So
11 months straight.
Right. So they're kind of waiting for that Goldilocks place. And unfortunately for them, they tend to wait a little too long and only catch the tail end of a boom market. So we'll see what they do.
We could use the builders to come back and build a bunch more houses. And so just to put this in, we did a video on this before, but people have anecdotally said, oh, but I heard the builders are slashing prices. Well, that doesn't really affect the real estate market. That affects the builder's profits. So don't say, oh, well, I heard a builder was selling homes for $800,000, now they're $600,000. Home prices have dropped 25%. Absolutely, home prices have not dropped 25%. I could list my house for $1 million and then go, oh, well, it's only worth 700. I guess I'll take 700. And go, oh, your home fell in 30% value. No, it didn't. So that's not the resale market. That's the builder's net bottom line on profit. We've talked a lot about this. Builders tend to build in higher end. Builders are not out there building $300,000 homes in a lot of the country. They're building higher end properties. We know what happened to the higher end. The higher end took a bigger hit than the other 3/4 of the market. And the disinflation for them is, they were counting on inflation because they were the timeline of them building a house, by the time they got it to where they either had it stand in inventory or whatever, they were they could make money on it. And now there's more uncertainty.
Right.
So they're going to basically, I think the problem with disinflation, like Wanda said, is, they're going to sort of back off and see what happens. And then by the time they start building, it might be too late. And then we might go into this funky thing in the fall again, where buyers have basically said, oh, well, now I'm just going to wait or whatever. So we don't know. The bottom line is nobody knows. But we do know this. It's picking up.
Right.
It's picking up quite a bit. And I think some of it's picking up because it hit lows. The lowest, and you all know this, October, November, December were the lowest numbers of sales and everything in like 15 years. But guess what? It's all in the past now. It's all, every month now, the numbers of sales are increasing rapidly.
Well, like Rafiki said, it's behind you.
It's behind you.
Okay, so if you had a good time with our video, if we made you laugh, if you learned the difference between deflation and disinflation, please like the video, share the video, subscribe, hit the notification bell, leave us a comment and tell us what mattered to you. Tell us what's going on in your market. We love hearing from you, and we'll see you on the next video. Bye.
Bye.